what is this? Hold on, it's not my writing. I want to make sure I send out a special thank you to my amazing and beautiful wife, Lisa. This channel would not be the success it is without her support. She's the best thing that's ever happened to me, truly. We'll edit that out. Hi, welcome to week 18, take 2. I have the microphone plugged in now so you can actually hear me. So we jumped from week 13 to week 18 because a lot's going on. We rebalanced our portfolio. We got rid of a lot of holdings. Consider this the new day one. The portfolio is going to look a lot different. For those of you just joining us, this is a Wealthsimple challenge where we use Wealthsimple and TFSA and we put in $100 a week. And we generally record every 2 weeks, so we're doing $200 at a time. But we're averaging $100 a week investment. If you're here for the U.S. holdings, the trick, it's not really a trick, I'll jump right into that. So basically, we've only had Canadian holdings in this account because they're free. There's no commission on any stocks in Wealthsimple, Canadian or U.S. But when you buy U.S. holdings, you are subject to not only the foreign exchange rate, but there is a 1.5% fee that Wealthsimple charges on top of that. That's to purchase and to sell. So that equals 3%, because you are eventually going to sell. 3% is way too high. You want to keep your overall commissions and fees under 1% of your portfolio. If you're doing that, you're doing well. So here's the way that I figured out how to do that. I'm going to mix in about 33%, a third of our portfolio into U.S. stocks. So that gives us an opportunity to hold a third of our portfolio in U.S. stocks, where there's a lot more companies, there's a lot more diversity, there's a lot more opportunity. And what that does is that cuts our fees in half, or in a third, because it's going from 3% to 1%. You're mixing in those high fee U.S. stocks with the free Canadian stocks. So you're not taking full advantage of the free Canadian stocks, but on the flip side of that, you're getting the opportunity to hold U.S. stocks. So it's just a way of kind of diluting the fees with the free Canadian stocks. So going forward, our portfolio will be 1/3 U.S. stocks, 2/3 Canadian stocks, and that is going to give us a total fee structure of 1%, which is fine. So I can hear Rio. He might be jumping in here soon. Okay, so let's jump into it. Our TFSA, you can see we're up $50. We had a good run last week. I'll show you the last week here. $82 up in the last week. So let's jump right into our portfolio and get this going. So the first holding we have is Amazon.com, and that's a U.S. holding. That's our first one. As you can see, the share price is $3,600 U.S. That's about $4,500 Canadian. Obviously, a stock like this we would never be able to hold in a portfolio where we are depositing $100 a week. But with the new fractional shares that were just announced with Wealthsimple, that started about, I think, last week. There are 15 or so stocks at the moment where you can buy fractional shares. So we were able to add some of these companies into our portfolio that we wouldn't normally be able to. So we want to have our U.S. hold. Hey, buddy. How's it going?
He always let me into his videos. But Mom didn't want me to go down because she didn't know that the people know me.
Yeah, the people know you. Come on in. You're allowed. I'm just telling them about all our American stocks. So what's been going on in the last 2 weeks? We haven't done a recording for a while. I was gone for a long time.
It's just the same as we do right now.
Just the same. So we have 5 U.S. holdings, and I want them to be about 6% of the portfolio. So that's our cost basis. So we're going to spend 6% of all our investments in our each U.S. holding, and then if they go on a run and they become 8-9% of the portfolio, that's fine. But for our cost basis, we're going to stick to 6%. So Amazon, right now we have $80 worth.
You didn't realize me? I was just gonna go in to play with my brown truck trains.
Yeah.
And I'd like to honk, but I'm worried the people will hear it.
I'll explain to them that there's going to be some honking, and they'll be good. Okay. Next holding is Alimentation Couche-Tard. That's our consumer defensive Canadian stock. That does very well. It's up 6%. Okay, so the next stock here is Axon Enterprises. You may know them as Taser. They used to be known as Taser. They recently changed their name because they do have other products. They supply the tasers for police departments. Yeah, I know. What am I doing investing in this company? Well, it's not a bad company. They also supply the body cams, and they have all the evidence stored on their servers through evidence.com. That's a subscription service. All these body cam, let me get rid of this here. All these body cam videos that you see, those are from Axon Enterprises, and without them, where would we be with all these cases that are going on, right? So that's why. All these stocks were purchased about 2 weeks ago, so you can see already there's quite big differences from the purchase price to now, so that's why I didn't buy these recently. So BAM is Brookfield Asset Management. We did have Brookfield Renewables, that's gone. Brookfield Asset Management is the parent company for Brookfield Renewables, Brookfield Infrastructure Partners, Brookfield Property Brothers. It's considered Brookfield Asset Management as an ETF for all the Brookfield companies. This is the parent company, and I switched over because this is a little less volatile and there's a little more growth. The dividend isn't there as it was with Brookfield Renewables, but as I mentioned earlier, I'm not too worried about the dividend. That was always an ancillary benefit of Brookfield Renewables. I was in for the growth, but BAM has that growth and a little less volatility as well. Next stock, Canadian National Rail. This is one of the stocks that is now available for fractional shares. The Canadian stocks, I want to keep it about 7% of the portfolio. This is where Canadian National is. So going forward, we're going to spend $14 of each of our $200 on Canadian National to keep that at 7% of our cost basis. Equitable Group is our next share. That's a bank that is that's up 6% as well. I am going to go more into banks in the next little while. The banks were not allowed to raise their dividend or buy back shares for the past year or so. That came from the regulators. That's being lifted, or it's in the process of being lifted, and they are all sitting on a ton of money. BMO is out. You may notice BMO is not in our portfolio, but I will double down on Royal Bank and Equitable Group. Those are our two banks going forward. And Royal Bank in particular is sitting on a ton of cash, and I see them raising their dividend quite high in the next few months. So keep an eye on that. Next stock here is Good Food Market Corp. Ticker symbol is food. This is a subscription-based menu food kind of delivery service. They offer vegetarian, classic, focused on good, healthy food. We have 11 shares of that, and it's up 2.8%. The next one is Google. You all know what Google is. That trades for $2,600 a share US, but it is available with fractional shares. So we have 0.03 of a share. Same deal with Google as we have with Amazon. We're going to spend about $12 every video on Google shares. Lightspeed, that's a new addition to the portfolio as well. That is it's Lightspeed point of sale. I'm going to show you another one here, Nuvei Corporation. I was debating between these two, and I spent about a week looking into each company, and I just couldn't decide. I was actually leaning towards Nuvei because they have a bigger gaming sector. They focus more on esports, and that's a big thing for me. But in the end, I decided to get both of them. So the next company on the list here is NVIDIA. That's another U.S. stock. It was trading for about 4 times this amount here, $194.12. And they just went to a 4-to-1 stock split. So NVIDIA designs and manufactures computer graphics chips. And the multimedia that goes with it. And this is one of the ones that we're going to hold for a long time, and you're going to see that slow, steady growth. Right now we have almost a half a share, and we actually bought a tenth of a share, but with the stock split, we got 4 shares for every 1. And so we only had a tenth, and now we have 4 tenths. So it's down a little bit, but again, we're not worried about that. QU, we're up to 205 shares. They're trading now at 32 cents. They were down to 29 at one point. It's 3.45% of our portfolio. They recently raised guidance, and their earnings are coming out at the end of August, I believe. So that's going to be a big moment when we see the revenue, because we know that they've signed. I'm so involved in this company. I'm saying we know that they have signed on some big name sponsors, and that they are setting records ratings. So this is going to be a big earnings report. I'm looking forward to seeing that at the end of August. Royal Bank, that's a company that is now available for fractional shares. So we're going to start doing that. Right now, Royal Bank makes up about 6.7% of our portfolio. We want to bump that up to 7%. Shopify, we finally have Shopify. This is a company that I love. Unable to own it in this portfolio because of the share price. It's $2,000, but it's available for fractional shares, and now we own it. Topicus is that's a vertical software acquirer. And when I say vertical software, what I mean by that is, how do I explain it best? Vertical software is software that is designed specifically for one company. Like what bowling alley would have their software for the screens when you roll the ball. When you roll the ball down, you can see your score. That software is designed specifically for that industry. That's vertical software. As opposed to Microsoft Excel and Photoshop, which is software that is generally used by everybody. So the last company here is the Trade Desk. This company is another company that just recently went through a stock split. They do, it's an ad tech company. So when you go online and you go to these websites, and they remember all your browsing habits, and they put ads up to tailor towards you. So you may be looking at, like in my case, when I was looking at engagement rings for my wife, all of a sudden I got all these engagement ring ads on my computer, and my wife was that kind of tipped her off. That's the Trade Desk. That's what they do. And the issue I had was that Google, which is the main, well, you know what Google is, they are changing the way they address third-party cookies and their privacy settings, which would directly affect the Trade Desk. So I was kind of not interested in the Trade Desk because of that. Now, two things happened. Google has delayed that move for at least 2 more years. And another thing is I recently learned on Twitter about Unified ID 2.0. It's kind of a way to replace the cookies, which is less invasive and respects your privacy more. And that will allow the Trade Desk to continue doing what they're doing. And that elimination of third-party cookies will not affect them as much as I thought. We got 2 shares of that. That's not a fractional share company. That's full shares. So we bought 2. And it's one of our biggest holdings right now because of that. It's 11% of our portfolio, but that'll come down.
That's not it.
That's it for week 18.
That's not it.
It's not it? What else did we miss something?
Welp.
You put a P on the end of that word.
Welp. Well, you talk about stocks.
I did. You missed it. You were playing in the background making noise. I'm sure everybody heard you. Yeah, I'm done. Do you have anything?
Nothing. Let's pop into Questrade, see my portfolio.
Your Questrade portfolio is not a part of the Wealthsimple video series. Maybe we'll make a new video series of your Questrade portfolio where every week we just watch it, because it's all ETFs and we only contribute to it on your birthday and Christmas. So every week we'll just sit there and watch it for 10 minutes. That'll be exciting. All right, I love you. Let's get out of here.
Where do you have to go?
I got to get my driver's license.